Hello everyone, welcome to Thai Finance. Today we're going to talk about such an interesting topic. It's the digital yuan. We're going to talk about how banks are being disrupted by payment systems and rising technology. I will give you some context of where we're standing and of course who is behind all this. What institutions are pushing CBDCs or central bank digital currencies? If you think this is interesting, you should definitely watch this video. So we're going to talk about disruptive innovation of payment systems. Technology is transforming payments. Digital innovation is disrupting the instruments like cash, stocks, bonds, and of course the institutions, your banks, our governments, and that have historically dominated our payments. Electronic payment systems have granted users a lot of convenience when it comes to interact with other merchants. CBDCs could be an alternative of SWIFT, which is simply a communication platform that gives instructions for international banking transactions. We shift from the internet of communications to the internet of value. And what do I mean by this? What I want to say with this is that, for example, if you send an email to other person, you're basically giving him a copy of what you have written on your emails. And now we have blockchain technology, which is the transfer of value through blockchain technology, and it's basically just the most common thing is just a peer-to-peer value transaction. So in January 2009, the Bitcoin network was created with Satoshi Nakamoto mining the Genesis block of Bitcoin. Since then, the crypto ecosystem began to gain traction until reaching a market capitalization higher than Visa and MasterCard in the second quarter of 2021. So now let's talk about the digital yuan. In 2013 started like a side project of the government. No one's basically taking that into account, but later in 2017 the government pushed the project and it was taken more seriously, and in 2020 it's already a pilot program in different cities and thousands of businesses. Government officials are being paid with this CBDC currency. Distributed ledger technology versus account-based technology. This is very important to understand. Distributed ledger technology, DLT, many peer-to-peer arrangement, this is person-to-person, use distributed ledger technology. These ledgers could be private or public ledgers. It's like public or private blockchains, right? It is a consensus of replicated, shared, and synchronized digital data geographically spread across multiple sites, countries, or institutions. Similar to an accounting ledger, the database is spread across several nodes. This is just devices like computers and hardware, and there is a lack of central authority. And it runs under a communication protocol, which is a system, a set of rules that basically work in a deterministic way. The perfect example is just Bitcoin. It's a transparent public blockchain secured by cryptography, basically. Another example could be XRP, which is a private blockchain run by Ripple Labs, right? It's a private ledger, let's say. And there's the account-based technology, which is what we have now, what we're used to, and basically there's less protection here. Whereas account-based systems record transactions in a central ledger. When it comes to security, centralization is just basically a target for, of course, for attacks. When There's distributed ledger technology. It's just more safe because it's not centralized. Records here are held in a back office, and it's not necessarily on any physical device held by the final user. Basically, you don't own what your digits are telling you. It's basically in a central office, and it's there, but it's not yours. You're not holding it. And this allows enterprises to use a third party to manage customer data, security, and the transfer of payments. It's just money transfer instructions. Users don't hold any funds or securities. Basically, the money that it's in your bank, it's basically not yours. And the best example is the SWIFT system. SWIFT, it's a cooperative society owned by its members, and members are categorized into classes based on share ownership. It's just private money. When we were in the gold standard, basically we have the US Mint or any other mint of any country. And since the Federal Reserve has appeared, well, it's just everything's just private. It's not yours. It's just debt. So it's not inclusive, and there's a lot of compliance rules and sanctions. And of course, it has worked until now. But of course, you cannot compare these two technologies because they're just so different with their pros and their cons. So I want to give you a quote of Agustin Carstens. While the concept of CBDCs was inspired by cryptocurrencies like Bitcoin, the ethos of CBDCs show a stark contrast from the ethos of cryptocurrencies in that they are issued by the state as a centralized form of digital money. So why CBDCs are a viable option? In theory, most of conservative form of money, it's a claim on a central bank. This is in theory. Of course, today I cannot, this is not financial advice or anything. Treasury bonds secure you a return of your investment, and you can go to the Federal Reserve and claim your money, and it will be there because they can even print it or whatever, right? But the problem is the purchasing power. In the present, currency debasement, it's eroding people's purchasing power. Fiat currencies like the dollar, the yuan, or the euro are backed by institutional trust, not math-based trust like cryptocurrencies. Institutional trust is everything. They lack a tangible anchor that prevents them from being issued. Nation states use population as collateral in front of other nation states. Basically, that's why you pay taxes. Basically, here's the 10-year treasury constant maturity rate of the US. It's just very, very low at the moment. They're just kicking the can, but old fiat currencies disappear eventually, and they are replaced by others until the system continues to work. Here's the Federal Reserve balance sheet that is expanding dramatically over the last years, right? In 2008 was already something that was unprecedented, and now, well, they just went exaggerated. Government spending, deficit, debt is out of proportion, and most of them have failed us. The economic system is vulnerable, complex, and prone to a collapse. I don't want to be alarmist, but the less aware the population, it's more stable. But in reality, it's just chaos. Of course, this will not collapse tomorrow or anything, but sometimes just things happen, right? And you should be prepared for it, but don't panic now. Yeah. Let's talk about the retail payment system. Retail payment systems are becoming increasingly convenient, instantaneous, and available 24/7. Basically, that's why banks are being disrupted, because DeFi, it's just very convenient for people. Nevertheless, payment systems still suffer from shortcomings in two important areas: access and cross-border payments. Why access? A large number of people, especially in developing countries and emerging markets, have limited or no access at all to a bank or other type of account for making payments, either by law. If you go, for example, to any Latin American country, if you go to a bank, you cannot open a dollar bank account so easily. They ask you for more resources, like monthly deposits that are just unreachable for most people, or either just by law, you just can't open a dollar bank account because they want their currency to be consumed, the local currency. So a research carried out by the Bank of International Settlements found that big tech firms that are in the DeFi, or they're just innovation in the retail payment systems, lend more in countries with less competitive banking system and less stringent regulations, using data from applications on mobile phones. Basically, all the banks just want to lend everybody. What's happening is just that these disruptive firms that are on the retail, they're just making it better than your normal banks. So obstacles to opening a payment account for sensible and vulnerable budgets include high costs, commission fees, or other costs. There are people that live just with $5 to $10 a day. So if they get charged by the bank, it's just nonsense for them. So it's not necessary to open a bank account. Of course, low yields. If you get the money there, you basically are losing money. Banks aren't giving you anything. There's low liquidity and zero return of investment. Lack of documentation, that they don't have the documentation to present to the bank, or they just don't even trust them. Furthermore, cross-border payments remain slow. For example, if you want to make a payment from, I don't know, Germany to South Africa, they're slow, expensive, and cumbersome. The number of correspondent banks closing a high share of cross-border payments fell by about 20% between 2011 and 2018, making cross-border transactions more expensive, hence more difficult to access to the global banking system. So every financial crisis, the incumbent banks come out bigger and more powerful, and the rest of the population weaker and more dependent. It's very serious that the purchasing power is being stolen, and as a consequence, they are under pressure from both fintech startups and technology giants. They cooperate together as well. And 86% of central banks are actively researching potential for CBDCs. 60% are already experimenting something, and 14% are in the pilot projects, like China. So what is the value proposition of the digital yuan? Basically, it's a private encrypted blockchain, of course, with a centralized protocol. Basically, as I explained before, it's not a public blockchain. It's the blockchain of the central bank. Of course, it's a fast payment system of digital currency. It's not an electronic payment. We have to be very careful here, because electronic payments, you don't own it. Account app communicates between banks to settle the payment. Basically, if you, for example, have an account in Alipay and you want to deposit in WeChat, basically it's just balances, and they're just links to balances, but you don't own the money in your device. It's basically a bank account somewhere that will settle at some moment through a communication protocol. And the renminbi is just a peer-to-peer. It's online. You can basically transfer the value of money peer-to-peer online with Bluetooth or just hardware to hardware. It would be just so convenient to do the transfer of money. Centralized regulation. This is very important. Central banks will regulate all the ecosystems, and there's a regulatory framework like the KYC, anti-money laundering, and monetary rules. There's a lot of security, of course, because it prevents paper money counterfeit from individuals. Of course, central banks are the experts on this thing. There will be a very easy adoption. It's just very fast to open a bank account. There's more cell phones than bars around the world. You can just open a bank account through WeChat, PayPal, Alipay, Tencent, Alibaba, and everything. And basically, recently, the CEO of Alibaba was like in a difficult position with the government because his company Ant Financial was, of course, losing revenue with all this, of course, proposal of the renminbi, right? They're not against each other. They basically need each other, but there's some tensions there. There's a big bag of data assumptions, okay? So data collection will tell the central banks how to take a better path for the monetary policy and credit worthiness of people, the citizen score, and prevent crimes, health policy. Basically, all this big data, I'm sorry for the A here, all this big data will get to the central banks, and they will tell them, because of the applications and everything, they will get information instantly, right? And take better monetary policy. Of course, there's privacy, because it's a central bank ledger, prevents data collection from corporate sector, but not from the government. It's like the corporate sector, like Google or I don't know, Tencent. They basically sell your information to other ones because that's their business model. But the government has no interest in sell your data. It's not its business model, but what is regulated, of course, it's the handling of data, not data collection. They are collecting data. And this, of course, it's a concern, but as well to the people that trust the Central Bank of China, well, it's just more private, right? But of course, we don't know. We can discuss many things here. And of course, the most important thing is that this will be an entry ticket to China's logistic network, which is a real-time product tracking, for example. The blockchain technology brings an infinite amount of logistics value proposition, because the logistics will be just enhanced by this technology. So you can, for example, if you are exporting something, you can track the product in real time just by using the CBDCs. Or the supply chain management will be amazing, because everything will be coordinated among everybody, right? And of course, there's more accountability. And there are a lot of concerns, right? Like the privacy, the persecution of the government, or even the money printing, which is how governments are issuing money to pay basically what they are spending, right? And there's this Cantillon effect. I want you to watch my other videos about China and the Cantillon effect for you to understand how paying government officials with this currency, it's just creating a Cantillon effect. They're getting the privilege first, the purchasing power first, and gradually it will be spread among the population, right? So watch these other videos. They are very interesting. And of course, these concerns are open to interpretation. And of course, you should research about this. What's doing the European Union with the CBDC adoption? This is a very clever idea. There is going to be one application called White App. And this Thierry Breton, it's a EU commissioner in charge of the digital policy. And it can be accessed via fingerprints, retina scan, and store official documents. You can store official documents like the driver's license. You can have it in your wallet. There will be no ads or marketing. It protects people online, of course, and it's a safe way to access private services online, log onto local government websites, or pay utility bills, which is actually, it's a great and a brilliant idea to make a service more convenient for users. And of course, this is the opportunity of adoptions that I'm not very happy about this, because they are trying to disappear cash. Basically, they are trying to disappear privacy, right? So there's room for scalability, accessibility, convenience, resilience, and privacy in this way that, of course, your information will not be sold to the corporate sector, but of course the central authorities, the government will know everything about you, like what kind of ice cream do you like, when do you go to the bathroom, where do you travel, where are you located. And of course this could increase security, but as well could increase some other issues that are concerning, right? Like an authoritative government or something. Data protection policies regulate the handling of the data, but the real problem is they are allowed to collect data, and that's wrong. And we're going to talk about the Bank of International Settlements. This is the institutions behind all this, okay? Its mission is to support central banks, pursuit of monetary and financial stability through international cooperation, and to act as a bank of central banks. The institution provides banking services to central banks and other official sector customers, and its banking activities include deposit taking, mostly in the form of money market and tradable instruments, the provision of gold and foreign exchange trading services. The bank's equity is supported by a strong and conservative capital position. The total assets stood at 308 billion SDRs, gold, and highly liquid fixed income instruments. So what is the Bank of International Settlements doing? Basically, they were falling asleep. The world was changing. The retail payment system is on basically years ahead of them. So they needed to do an innovation hub. And the incubator hub is located in Hong Kong, Singapore, and Switzerland, and detects critical trends in technology affecting central banking and fosters cooperations with other central banks to bring more stability, safe infrastructure, and innovative financial technology within the central banking community. And basically, the Bank of International Settlements, it's where all the most powerful people, all the most powerful bankers go sit around, discuss things, and take decisions, basically. This is a very important institution, very powerful one, and it's basically at the level of the IMF and everything. So multiple CBDCs, the MCBDC bridge, it's a wholesale central bank digital currency co-creation project that explores the capabilities of distributed ledger technology, which I explained to you guys, and studies the application of the CBDC in enhancing financial infrastructure to support multi-currency cross-border payments. And I will explain to you this. There are two things happening right now: the retail and the wholesale, okay? So the retail, it's not ready yet. It's about getting it right. It must be revised and then deployed, of course. They don't need to hurry to do that. They just need to do it right, and it's aimed to a large number of people, okay? This is the retail sector of CBDCs, which is far from being deployed by many central banks. They are years ahead of what's disrupting banks. So there's the wholesale of CBDCs that can be immediate, basically. They are already doing this. This is just like, of course, it's so easy to do, and that wholesale systems typically have a small number of participants, this being the banks, the central banks, the BIS, and include, of course, these central banks in a leading role. As I told you, it's not about getting it earlier, it's about getting it right. Many cryptocurrencies are just flourishing now, but some of them are really not very stable. They don't offer a good value proposition. They're not to be trusted. They're not safe. The big players like Bitcoin, Ethereum, and all of those are already consolidating before CBDCs of governments. So, by the way, through the Ethereum blockchain, the BIS is exploring the capabilities of a POC. It's like a prototype of the CBDC and of real-time cross-border like forex payments and fund transaction redemption to the central bank. This is basically a whole system communicating within each other in the wholesale sector and monitor wallets and funding limits. And of course, this automating reporting to regulators will be available 24/7. So there's this pilot project going on already through the Ethereum blockchain. They are catching up. What institutions are behind the CBDCs? Saudi Arabia has made improving cross-border payments a priority on the G20 group. The BIS is taking a leading role in these efforts, as I explained. The G20's efforts are led by two bodies hosted by the Bank of International Settlements. So the Bank of International Settlements, which is the central bank of central bankers, it's in the most powerful club, which is the G20, the most powerful economies, and basically through the Financial Stability Board and through the Committee of Payments and Market Infrastructures, CPMI, are developing a plan to enhance cross-border payments. Of course, money and payment systems are funded on trusts in the currency. That's it. Everything's just fake. Everything's founded on trust, whether it's cash or digital. And this trust is something that only the central bank can ensure. Of course, they failed us already, but many people are not aware of this. The pace of change and potential for disruption have propelled payment systems to the top of policymakers' agenda. They're basically going all in with this. And institutions behind deploying the CBDC projects are the Hong Kong Monetary Authority, the Central Bank of the United Arab Emirates, Digital Currency Institute of the People's Bank of China, and the BIS. So just follow these institutions if you want to know the latest trends and how, of course, they're coordinating all this. So the central bank digital currencies, CBDCs, open possibilities for easy bilateral trade and settlements. Of course, it could be sidestepping the US dollars, mainly in Asia, or including it. We don't know that yet. And a key difference of CBDC is that a central bank will have absolute control on the rules and regulations that will determine the use of that central bank's liability, and will have the technology to enforce that. This makes a huge difference and a concern to trust and privacy infrastructure. And I want to make a small parenthesis for you to like the video, subscribe to the channel, hit that red button, then hit the bell button, then hit all so you get all the notifications to support the channel and to continue receiving all this relevant information. So thank you so much for being here. I hope you really like it and share the video with the people you like. Okay, thank you very much.